Through fusion technology, each microessentials granule is nutritionally balanced to deliver uniform nutrient distribution across the field. While traditional fertilizer blends may contain the same nutrients, they are often in separate granules, making distribution wildly inconsistent. The result? Vital nutrients applied in small amounts, like elemental sulfur and zinc, aren't accessible to every plant. But with more sites for plants to reach the nutrition they need, microessentials more efficiently delivers balanced nutrition to each and every plant, resulting in higher yields and higher profitability.
Good deal. Well, good afternoon. Again, we're glad to have you here at the Big Iron Farm Show. It is no doubt a strange year in this world of COVID. I'm sure we'll get a little talk about that here today as well. We're glad to have you here at the Red River Farm Network Issues and Events Center. It's the 40th year for the Big Iron Farm Show. It's the 25th year for the Red River Farm Network, and we've been proud to be a part of this show at least over the last number of years. So my name is Don Wick. Megan Overby is with us as well. It's just about threw Turnquist out there for a second.
I accept both names.
And we have Randy Coonan just got done with markets, Kara Hart, and I think Jay Rader's hanging around here somewhere as well, also from our staff. There we go. But we're here to talk markets, and it's kind of fun to be here at Big Iron and watch a market that's been stronger, especially going into harvest. It's kind of unusual for us. We got a great group here to talk about that. Right here, Jenna Knutson, grain merchandiser with the Arthur Companies. Jenna's out of the Harvey, North Dakota area. Mike Krueger, founder of the Money Farm, longtime contributor with World Perspectives, and we're just going to call you a veteran market analyst today, all right? And Bret, longtime with Extension, and now with Innovus Agra, leading that firm. Again, a good chance to talk about this market. Let's just go where we're at. It's been 3 days here during Big Iron talking about higher prices. Give me your spin. What's happening in this trade? It's really obviously different to be talking about a demand market when we normally would be thinking about how many bushels we're going to be bringing in this fall. Jump in it, Mike.
All right. I was talking earlier, actually for the last month, so here's what's changed. 2 months ago, I thought we could see December corn futures under $3, and we were close to that. That's when the crop readings were fantastic, everything was good, demand was slow. We thought at that point in time, or I did, that maybe we could see soybean ending stocks exceed 1 billion bushels, right? Double or triple what they were a year ago. And, like they used to say, a funny thing happened on the way to the forum. They had the derecho, or however you say, the big windstorm in Iowa kind of started changing people's attitudes about markets. Not sure how much damage that did. USDA cut corn acres by 500,000 in Iowa basically because of that. But anyway, that started to take some of the yield away from corn, hurt beans a little bit. And it didn't really rain in a big chunk of Iowa and some of that surrounding area from late June until just recently, and people ignored that. They ignored the fact that it had been very, very dry, unusually dry. And then I think the final thing was on the demand side, China started to become a very, very aggressive buyer, first of soybeans. They bought a little bit of wheat, but in the last month they have bought just a ton of corn. And maybe we'll talk about numbers later on. But that's what started it. The funds were big-time shorts, record shorts in corn early this summer, so they started finally to claw their way out of that. Producers weren't selling, and everything just finally started to rebound in our favor, and we even got a halfway friendly USDA report for the first time probably since Jenna was born.
Bret, do you see that momentum continuing that we have here with China?
I mean, the Chinese different beast, right? We've got a phase 1 agreement with them. And so far, they've been very active buyers of a variety of commodities. And if they continue to do that, it'll be supportive of the markets. I'm more concerned about the funds deciding that they've had enough of this long business and want to go short. Because we can go up pretty rapidly like soybeans, and we can start pricing ourselves out of the world market with that kind of a run. And at least from my viewpoint, the funds are driving soybeans now, which is being supported with both wheat and corn. They decide that they're going to start taking profits significantly and run short on those beans. I'm not working or what?
No, try that. I think it was
Check.
on.
Check.
There we go.
All right.
I'll take a check.
Okay. Can we start over? Just kidding. So it's excellent that we have this opportunity to sell beans with a 10 in front of them. And you just had Tommy Grisafi on the radio. Tommy, when was the last time prior to this run that we had $10 in front of soybeans? You and I were sitting on the stage up in Grand Forks in Prairie Grains December 12th of 2018, and the July 19 contract traded at 10 for 15 minutes. That's the last time we saw 10 in front of soybean futures. Now we've got it in front of a whole bunch of them, at least for this crop year. And it'll be interesting to see how sustainable that is and how long we're going to be able to keep that running. And the question that everybody keeps asking is, well, how much higher are they going to go? And not only that, I've been getting all kinds of texts and questions. You know, I've got these orders in on corn and soybeans, and we're getting pretty close to getting them filled. Should I keep them in place? The answer is yes. Keep them in place.
Well, and my question for you, Jenna, is you maybe bring a little different perspective. So from the farmer perspective, the farmers that you work with, from a merchandiser perspective, what does that mean for them? There's obviously been a lot of opportunity, hasn't there?
Yeah, absolutely. Touching on what Mike said, we're looking at lows. Farmers were panicking going into harvest. We're used to seeing the harvest lows, and now we're, ramping up. Soybean harvest are starting out in our area, and we're seeing $9.50 cash price. And a large part of that is basis. China has been a huge buyer coming to the market, and then futures have been following right along. So you add those two together, and it definitely helps out cash price for these guys.
I want to say one thing about basis. The other thing people have ignored is that freight has gotten terribly expensive, right? I mean, we sat with freight at even the tariff or even discounts for 2 or 3 years. All of a sudden, what are we, $1,000 over per car? A fellow from Southern Illinois who operates a barge facility told me this morning that corn and soybean basis at his barge facility are the highest they've ever been at this point in time as the harvest starts. So despite the fact that we've got an extra 30 cents or 40 cents in freight, we still have a great basis locally, which tells you that the demand is real, at least today.
So what are we seeing in basis, and how unusual to see it at this time of year, Jenna?
Well, at Harvey, exactly, we're 75 under, and last year at this time we were $1.30. So it's crazy.
On beans, right?
On beans.
What's your corn basis?
Corn, we're 65 under, and that's better this year.
What's your March corn basis?
March corn, we're 50 under.
Okay, let's get that to 35.
Yeah, absolutely. Might see it.
Yeah.
Actually, I think we will see it because the secondary, you guys have to book freight a long ways out, right? The rail freight. So.
You can do spot, but.
Right, you can do
like now you're gonna
spot, but
pay
for the most
big.
part, there's going to be trains that are getting sold because there's not much corn planted in North Dakota. So I don't know what the secondary rail market is, but I mentioned that we wanted to get 35 under the March yesterday at the Wheat Growers Marketing Forum. I got a call from an elevator manager in my home area today that said, we're currently at 37, and you think they'd do that? And I said, no, 35.
And the secondary freight market is what's $1,000 over. It's expensive as it's been in 3-4 years, probably, maybe 5.
Well, I guess that kind of answers the question I was looking at right here. But let's talk a little bit more about this rail activity. Is it ramping up for a while? It's just you couldn't get a train to go anywhere, especially the Pacific Northwest. What's the scenario now? How have things changed?
Well, at our locations, we've been selling pretty aggressively out to the P&W just because the bids have been strong. Farmer selling has been pretty active the last couple weeks, heavy on the front end, which, of course, the farmer always wants to sell at the high, and now it's how high is the market going. So farmer selling has kind of shut off just because we did get a lot of sales going up, but it definitely is going to keep increasing.
And then, of course, the lift has approached, right? Because they had a price in mind, and now all of a sudden that price isn't good enough.
Yep, we get
So
there and
they're
you
gonna
call
lift
them, and
those.
50 cents higher they want now.
So back to the P&W. So I just took some notes this morning because it was the weekly export sales report, just for comparison. So a year ago at this time, we had a total of 13 million tons of wheat exports on the books. 12. This year we're at 13, so a little better. If you look at corn, a year ago today, and the new crop corn year just started, we had 8.5 million tons of new crop corn export sales on the books. Today it's 20. A year ago, China had 300,000 tons, which is not very much. And today, so far, they're over 9 million tons. So that's 360 million bushels, of corn. Soybeans, a year ago, we had a total in this country on the books of 11 million. Today, it's 32 million. China had 1.5 million tons on the books a year ago. Today, it's 16. So we're talking about 20 to 30 million tons, 40 bushels per metric ton if you want to do the math, more export business on the books today at this time than a year ago, and the bulk of that has got to go through the P&W, and the BNSF has had cars parked all over the place, so they're scrambling as well to to get, locomotives, power back in shape and cars. So it's a huge change. The question is, how long does it last,
Well, and my follow-up to that is, when do we I know nothing's typical nowadays, but when do we typically see that China buying pattern ramp up? I mean, when are they going to be looking for more beans, or are we going to see just, them have some more interest from here on out?
Yeah, I mean, their talking quotas have been close to met, or, we're from the U.S. A big competitor for us on exports is Brazil. Rumor has it Brazil's out of soybeans right now, and they don't start planting, until a couple weeks here, and they're dry over there, which is not normally an issue this early on, but it could turn into an issue for us. But they're definitely planning on planting quite a bit of beans over there. So we'll look at the U.S. dollar compared to the Brazil real, and going forward, they'll buy the cheapest beans they can.
Well, they'll also buy the beans that are available, which they don't have now.
Yep.
But come March, April, into February, there'll be new crop beans available in Brazil and later on in Argentina. So we've really got 2 harvest cycles in the Western Hemisphere, and that is now for us, and then springtime for South America. So we can experience 2 harvest time lows, even though we're not experiencing ours now.
We were talking before we got on the stage about what's happening, obviously, with our market, but how that's translated into what's happening for that bean price in Brazil. Really, the currency's giving them a huge lift right now.
So I've got a friend who farms in Bahia, Brazil, and we talk every 2 or 3 weeks. So soybean prices to the Brazilian farmer a month or 2 ago were all-time record highs, even way higher than back when our futures were 16, 17 bucks a bushel, all because of the currency. Pretty darn good money on beans. And the same fellow told me last week that he thinks farmers in Brazil have already priced 60 to 70% of the crop they're going to harvest this next spring, March, Jan, Feb, March, just because the prices are so high. That hurt, so that's what hurts us in terms of exports, right? Whether it's corn, wheat, soybeans, the dollar strong. Brazil, our biggest competitor in both now corn and soybeans, terribly weak currencies. They've got a big advantage.
I've always thought of the Chinese buyers being very astute. They know how to price, get the right price for that commodity. Do you see them as a price buyer or a demand buyer?
China? I think it's a little bit of both this year. I mean, they are really ramping up their hog production that got decimated with the African swine fever, so that's part of it. We saw their exports dip. It was on that steady upwards 45-degree slope, dipped 2 years ago for the first time in probably 15 or 20 years, and some people thought it's never coming back. Well, it's already back. It's going to exceed that. So I think both, and then I do think that the Phase 1 agreement, if they're going to abide by that and reach that $35 to $40 billion number in total purchases, they're going to have to buy probably 35 million tons of beans, and they're at 16. But I think you have to take advantage of this market at the same time.
Well, yeah, that's what it really boils down to is, we had a lot of farmers that were making fear sales on new crop, both old and new crop soybeans prior to this rally. And they were just saying, we're getting into that time frame when we see prices historically drop and basis historically widen, and we don't want to get stuck with a bunch of beans that are worth $7.50 a bushel. So they were selling early, and now they're not selling near as much because they feel like they've missed out, and they would like to make up for that loss by letting this thing run as far as they can. So that's the old crop 19, new crop 20 story. And then we've got the new crop 21 story, where we've got a 50-cent price inversion from July 21 to Nov 21. And I don't want to step in front of that freight train right now in terms of putting on a spread trade. Right. But if we see these things tip back over, that will readjust itself. So farmers need to find a way to take advantage of that by maybe using futures, using July 21 as their new crop hedging month, and waiting for that inversion to flatten out before they step them out and turn them into a November futures hedge or a hedge to arrive hedge or a cash forward sale for their 21 soybeans and still keep that 10 in front of them.
Problem is, if Brazil or Argentina has a weather problem, that July 21 future is going to bury you, like happened 10 years ago in the corn market. You know, it's a big if today, but if you're hedged still in an old crop position and there's a production problem down south, you're going to have to watch that pretty carefully.
Absolutely, but even in 2012 when we had that drought in Illinois, that inversion in July to D's corn corrected itself before we got into delivery.
Brett, you talked about the managed funds and such. With the beans, the ag commodities where we are today, is that bringing more investor dollars into the ag world?
You know, interestingly, I have a lot of extra spare time now, right? Like my wife says, I have way too much extra spare time. But for the first time in years, all these talking heads, no matter what, whether you're listening to Fox News or CNBC, it doesn't matter, Fox Business, I've seen more people in the last 3 weeks say the worm is going to turn, you know, equities are all-time record highs, time to buy commodities, not just corn or wheat, but gold, silver, oil, you name it. So how big that undercurrent and how much that moves money, I don't know, but that sense is out there and it hasn't been there for a while.
Well, and we'll continue this conversation, but I do remind our audience, start thinking of those questions, because at any point during this conversation, you can ask them or get a hold of somebody in the audience from our team. They can ask it for you. We want your input and questions too, so be sure to do that. So on that talk, I want to talk about the US dollar. The value of that, of course, is weak, especially weaker than what we saw a few months ago. So how big of an influence is that on the agricultural markets?
It's huge, because now all of a sudden we've changed the dynamic in how competitive we are against Brazil with both corn and soybeans. And if you look and track that real versus US dollar, there's been a significant change in that in the last 60 days, maybe 90 days. And I don't think people watch the dollar index close enough and how it relates to our commodity futures prices, but it's huge. So that's one of the key things that I think people need to watch.
Fed also came out yesterday saying we're going to keep these interest rates at near zero through the end of 2023. What's that do to the monetary policy, and what's that do to the ag futures?
First of all, I think we're about the only country in the world that still has a positive interest rate, which tells me that the dollar is going to have a very difficult time getting very weak. As long as they can put money here and have a positive return, you know, the dollar could be relatively weaker like it is, but I don't think it's a long-term thing. So if you give a bank in Japan $100 today, in 6 months you're going to get 90 back or something like that, which is a pretty big incentive to put money here. And I'm not so sure if the election is going to impact that very much. I don't think so, but I don't know.
You guys, Bret, you talked about 2021. I'm curious, how much old crop do we still have in the bin at this point? Jenna?
You know, we had been surprised of how much old crop's sitting out there. There's been a few customers come to us with a big amount of corn bushels or soybeans. We typically see a few birthdays of wheat on the farm. But yeah, there's been some old crop, and these guys are still holding on to it. And, you know, there's definitely opportunities with these markets coming back up.
Well, that was going to be my question. You know, if they don't get rid of it now, why would you hold on to it? Yeah.
$8.
Well, yeah. I had a farmer that we just got rid of the last of his $7 corn about a year and a half ago, but that was through an estate sale.
Well, that kind of transitions into my next, question is, okay, so we have some pricing opportunities, but are some of these farmers, especially here in the Northern Plains, worried about the bushels now? We had that early, September frost. Jenna, you were talking a little bit about this beforehand. Some of the beans maybe did get nipped.
Yeah, absolutely. We were hit with the frost last week. And, I looked at this, NDON came out with a map, and our specific area was the coldest for the longest time, besides up by Canada. But there's definitely some beans showing it. The first day, you know, it took off more of the canopy, but we stayed cold through that day, and that second frost really hurt the bottom half of that plant. The beans we've seen come in so far, not much issues, but they were mature before the frost hit us. So we'll definitely see some decrease in yields and maybe some green beans or quality issues, but it's far too early to tell yet.
When you think of that, USDA is talking what, the second largest corn crop, third largest soybean crop on record. You know, you can discount maybe frozen beans in North Dakota, but the dry crop that we've got in places like Iowa, the August 10th windstorm, is there the crop out there to justify those kind of numbers?
I really question what we're going to have for harvested acres, because I think there's some uncertainty in Iowa as to how much of that corn is actually going to be salvageable, particularly with the dry stress that it was under before it tipped over. We had a bit of a wind event in west central Minnesota last year, and it wasn't nearly as widespread or nearly as devastating as it was in Iowa, and we ended up with 50 to 60 bushels less per acre in the spots that had the wind damage, and that was in an area where we had adequate moisture for that plant to recover and start to tip back up. They've not had that luxury in Iowa. Those plants were tipped over, and they're still down, and then they got rain on top of them. So I would guess there'll be more abandoned acres that are now 0 bushels per acre instead of 125 to 150. But there also may be some real quality issues with corn that's sprouting and maybe even molding on the ear, and then having to deal with that. And of course, our elevators would love to get that stuff in, right?
What's your thoughts on that, Mike?
I think both the corn and soybean yield are slightly overstated. I don't know if it's a big number, but with all the things we've talked about, isn't this still a record corn yield? The one that came out with last week? I mean, so it's not like we had a total disaster. But I do think it was dry so long in some pretty significant areas, a couple of windstorm, a couple of frost in a few areas that, in the case of corn, yeah, we still have room, right? It's not like we're short of corn. Beans, though, you start whittling away at bean yields, and all of a sudden the bean market is the one to me that has the potential to be outright bullish. I mean, some things are going to have to happen. It's going to have to stay dry in South America, but the numbers in beans, particularly in the U.S., are tight. The green bean issue with frost on soybeans. A couple of my old buddies were fishing in Devil's Lake last weekend, one of them still active in the grain business at the elevator level, the country elevator level. And I think, so I'll tell you how old I am. I started with Cargill in 1974. And over the years, whenever there was a frost freeze, it was just panic about how are we going to handle green beans? And I don't think it ever ended up to be a problem. You know, first of all, they've got to be green.
Yeah.
John Deere green all the way through. And even in the areas where there was a problem, it seemed like 2 months later, after they've been in storage, it's not a problem anymore, or the market doesn't care. Doesn't mean we didn't take a little bit off the yield and test weight because of the freeze, but the green bean problem, that doesn't really bother me much.
You touched on earlier, Mike, about the China buying corn. How unusual is it that we've seen the kind of sales to China in the corn market? We traditionally look at them as such a soybean buyer.
They already have bought record by 2 or 3 times what the most they've ever bought before.
And I think that's twofold. Part of it is phase one.
Yep.
But the other part of it is China's the number 2 corn grower in the world behind us. And they've got some real production challenges with some areas that are incredibly wet. If you've watched what's going on at Yangtze River with some of the issues, that big dam and all the moisture around there, they're not going to have the corn production that they normally have. And as they try to rebuild that sow herd and get that meat protein back in line, they got to have something to feed them to. And they're going to have to buy corn from us and Brazil. And right now it's to our advantage to be shipping corn to them.
If you take China's corn stocks represent like between 50 and 60% of the total world carryover on corn. If you take that out of the equation, the world corn situation is pretty tight. And nobody knows whether those stocks are real or what quality they are. And I think we're going to find out in the next 6 or 8 months as they rebuild herds. You know, there are auctions on reserve corn. The decent stuff is going at record high prices. Domestic prices are high. So we don't know. I mean, remember that 15, 20 years ago, the Chinese and USDA just arbitrarily added 150 million tons of corn, and they did the same for wheat, China supplies. So,
Touching on that, I mean, that China coming in to buy corn, do you think it's some of it to do with hitting their phase 1 purchases?
Exactly. You mentioned wheat. It's dry in Australia. It's dry in the Black Sea region. I mean, there's other parts of the world that are. I know we can grow wheat just about everywhere, but do some of those dry weather concerns in other parts of the world, is that any concern issue on the wheat market?
here's the thing on wheat. I think it is. I mean, I think ending stocks among the major exporters, which is the Black Sea region. Europe had a horrible crop this year. Canada had a good crop. We had a decent crop. But ending supplies are tight among the major exporters. The problem is it hasn't translated into any big pump in U.S. wheat export sales. And I think once we start to see that happen, for example, if Egypt would buy one cargo of U.S. wheat, I think the wheat market would get pretty excited.
Well, that was going to be my question. So wheat's kind of been a ho-hum commodity and not real exciting the last couple seasons. You know, has there already been a little bit of opportunity to get excited about wheat, or is there opportunity to come for our farmers here?
I think soybeans is going to drive both corn and wheat for the time being. It's going to be supportive of them. I see wheat in Chicago was up 12, 13 cents today. And it's out of balance with Kansas City wheat. It's out of balance with Minneapolis wheat. It's out of balance with corn. So Chicago wheat is actually trading at a premium to all the commodities that we compare it to, whether it's other classes of wheat.
It has been for a year. Right?
It has been. Well, yeah, off and on. I mean, it's swung both directions. But, you know, it's been kind of a beast unto itself, Chicago wheat. Minneapolis wheat has actually not performed as well as I thought it should have based on acres and yield. I thought we should maybe recover some more rapidly than what we have on spring wheat.
We've seen those wheat acres continually to go down at historic lows. Is the U.S. really even a player in the wheat market anymore on the global scale?
Yeah, we're still the second largest exporter of wheat. But interestingly, you know, 40 years ago, Russia was the biggest importer. This year, they're the biggest exporter of wheat. You know, and if they have a good crop and they've had 3 out of the last 4, they sell it cheap, ridiculously cheap. But that's what they do. So as soon as you take them out of the center stage as an exporter, then I think that we will regain traction really quickly.
Well, and Jenna, what's your thoughts on wheat in your area? I know there's still a handful of farmers with wheat, and but really it seems like we're shifting to some more of these specialty commodities and just trying to find something a little different.
Yeah, absolutely. I mean, no one's excited about $5 wheat if we can even get $5 cash. You always get the guys who say, I'm not growing wheat anymore, but they also can't stray away from the wheat. There's definitely some specialty crops out in our area. I mean, you take the edible beans, for instance, there's some quality issues there. We do a lot of canola, flax, that kind of, they bebop between, but.
Yeah. No.
Obviously, in the backdrop, and don't mean to interrupt, Megan, the backdrop on all this is the pandemic that we're dealing with. When that hit, March and May, the grocery shelves got empty of bread. It was hard to get flour. People started baking bread again at home, which
then you couldn't get yeast.
Yeah,
Yep.
yeah.
You get your house full of flour, couldn't buy yeast.
So, do you see? We don't know where we're at with this pandemic, but can there be a story for wheat moving forward?
I think if there's a second wave, or
Right.
if cases really ramp up again and fall like they're predicting, I think we could see that happen again. It definitely helped the wheat market. Yeah, everyone was baking. I'm actually a baker myself, and I do bake my own bread and buns. So I was at the grocery store looking for the yeast, and that's when I noticed the shortage. I mean, all the flour was gone, no yeast. So there's definitely a lot of bakers.
You don't think of that happening in this day and age. That was really a shock to everybody's system. How do you think COVID's impacting the global marketplace? How has it, and how will it as we move forward? You know,
Every time markets were down the last 4 months, there was a always the caveat, well, you know, people are worried about demand because of COVID. But if you look at the numbers, demand really hasn't gone down worldwide for any commodity. It continues to slowly climb. And I think we've seen a blip in demand for wheat and pasta, especially in this country, right? Because people are buying all the flour, buying all the pasta because it stores. You know, they could just put it on the shelf or basement or wherever. So I think our domestic consumption of wheat was up in this last marketing year. It'll be up this marketing year in part because of COVID. Now that may mean eventually, you know, you see it dip a little bit, but I think so far, just because of the hoarding, it was a little bit beneficial.
If people, I mean, obviously we had kind of a meat disruption with certain cuts dropping in value significantly because restaurants were closed. Do people consume more bread items at home than they would if they eat in a restaurant? I mean, that's a question I would have. And how sustainable would any domestic consumption increase be with our current population and consumption trend?
I don't think people want to bake, right?
The idea sounds better sometimes.
Yeah, I mean, the typical consumer today, no.
Yeah, you bake one loaf and you're like, gosh, that was a lot of work. Never again.
I'll just buy the loaf, pre-cut.
We got a bread machine. You just throw crap in there and turn it on.
One area where we have had an impact is we're not spending as much time behind a wheel anymore. We're not putting on those road miles, and that may not change for a lot of folks for some time. It certainly has had an impact on the ethanol industry. How healthy is the ethanol business today, and what's the future?
I'll tell you what, I agree, because I think, you know, the commuter miles have gone down significantly, and I don't think that's ever going to recover unless something dramatic happens. When you start looking at people that live in suburbia and beyond, commuting into Minneapolis or other areas where there may have been some unrest, and couple that with the fact that a lot of folks have become more accustomed to working out of their homes or a home office, I think it's going to be really challenging to bring back gasoline and ethanol demand to where it was, particularly if we push corn prices up closer to that $4 mark.
Yeah, the ethanol industry is struggling. I mean, margins are, in the best case, probably break even. Most cases, negative today. I think the one shoe that hasn't dropped yet that the ethanol industry is hoping for, and it would be the second leg to help corn, is, you know, there's a lot of people that think if China's going to meet the phase one, just the dollar deal, that they're going to have to import one hell of a lot of ethanol and DDGs. And so far, I don't think that's happened yet. If that happens, that will resurrect the ethanol industry pretty quickly.
Are those ethanol plants, I mean, a lot of them shut down. Have they slowly come back into production?
I don't think we've shut very many of them down. We're still, if you look at the weekly grind numbers, we're still pretty close to where the USDA says we have to be to meet their objective. They reduced that by 100 million bushels of corn last week, but there are some that are shut down, but we're still grinding a pretty big chunk of corn on a weekly basis for ethanol.
Yeah, and I think most of our regional plants are operating. I think the ones that did shut were maybe on the fringes maybe in Ohio or some of these places where they'd had some relatively tight corn supplies the last couple of years due to some production challenges. And it just made sense, rather than freight corn a long distance, that they shutter or slow those plants up. But I don't know, I guess I'd have to do some digging to see how many of those plants are actually operational and how many are not.
Well, and two, let's check with our crowd quick, or do we have any questions out there? Because...
What do you think is going to happen to the markets between now and New Crop South America? I mean, bases and futures. I mean, I know you give all kinds of back and forth. I talked to a grain buyer this morning. He figures it's going to be steady to higher, but there might be some dips along the way. So,
Yeah, it could go either way. I mean, we really won't know until we see the quality out there. And, the big supply story is the yield of the soybeans. Is it there? There's areas that are going where they've seen anywhere from 10 to 20 bushels an acre below what they expected. So, if that kind of keeps up, yeah, we could see this go in throughout harvest and after as well.
I think basis is going to get worse as we go into harvest because a lot of people are just going to deliver soybeans and that's going to take up space. And then any place that's got a good corn crop, that's going to compound that. So I would expect basis to get worse between now and harvest and then improve rapidly after harvest as we start pushing that grain out through our end use and our exports. Futures, I don't know. You know, that's part of the big challenge is, do you sell or do you wait? And I'm an incremental encourager, so I think you need to reward these soybean futures now. And if you haven't begun selling, begin selling soon and find opportunities and try to make some money.
I agree. We've gotten a 70-cent gift on corn that we never expected 6 weeks ago because of all the things we've talked about. Bean market's super strong, and we've got some of the best basis right in the smack of harvest.
Absolutely.
I mean, I just think you need to have some stuff out the door. How high can futures go? You tell me when it starts to rain in central and southern Brazil and western Argentina. That's, to me, going to be the next key. And once harvest is done, if farmers stop selling, this market needs to buy grain for the next 6 months. So basis is I think, going to stay strong once we get through the harvest period.
Another question?
Yeah, I have a question actually from someone in the audience that handed me something they had just seen on Twitter. Some news that President Trump about to announce $13 billion in new farm aid at a Wisconsin rally. So my question, or the question to the panel, what happens to the markets, or maybe it's up for discussion, what happens if we see more CFAP or Coronavirus Food Assistance Program?
We see more money from the government, you mean?
Yeah, more ad hoc payments.
It allows a farmer to hang on longer, right? To put more stuff in his.
Yeah, exactly. They get cash. They don't have to sell.
Right.
And that's one of the things I'm sure you saw earlier in this year. When they needed cash flow, it came from a different source than it normally would. I did a lot of billing when those checks came out, and it also deferred grain sales because they didn't have to.
Yep, it definitely locked up grain. Then they waited for the higher cash price rather than adding the payment to price that they're receiving. But yeah, it definitely locked up.
But I'm
grain
not sure the
sales.
market will look at payments that'll have any impact on
If
funds or
yeah.
futures traders or anything.
If it has any impact, it'll be on basis because you're going to have to bribe them to get it out.
It may impact the balance sheet, though. So I know some of you do some work with farmers on the balance sheet, and maybe you can speak to some of that.
Well, I mean, obviously, it's going to help the balance sheet because it's an extra revenue stream that's coming in. And, anytime we can heal up, and again, we're talking about a region where we're going to have a record corn crop in some spots, and we've got a disaster in others in terms of production. And they can be within 50 to 100 miles of one another. So, I don't know if we've got any lenders in the crowd today or listening, but, we've got some lending institutions that are going to have both ends of the spectrum this year, where they've got growers and customers that are really going to be financially strong because of high yields and improving prices and government support. And then we're going to have other areas where poor yields and nothing to sell into these increasing prices, and the government support is the Band-Aid that might keep them in business.
Well, that was going to be my next point because, I got a husband, a father-in-law, a dad, a brother. They're all farmers. The first round of CFAP support came around that spring planting time. They're maybe able to pay off some of those, inputs right off. They didn't have to finance it. Well, if we get more support during the fall harvest time, what does that do? Does it help better prepare them for 2021?
The other aspect of that is, remember, we still have to calculate the harvest price period, and it's going to be higher for the first time in several years than the initial price. So that will spread a little more wealth to those areas that got whacked because of drought or winds or whatever the case may be.
I'm just trying to think, soybeans will be higher on the harvest price. I'm not so sure corn will be. I think corn was in the 380, high 380s, and we're not there yet. So we may or may not see an increase in the corn price for crop insurance. Certainly will for soybeans. And wheat is
Maybe a push.
Yeah, it'll be a push probably. It might be about a wash, but
I don't remember where
soybeans,
corn-
soybeans will
But
be the
remember
one
where
crop.
corn was, the initial price on corn, established the month of February? It was 380, 385? Okay. So where we are today.
We happen to be in an election year. How big of an impact does a presidential election have on the marketplace itself?
Not the marketplace, but it's $13 billion, right?
Right?
Okay.
Yeah, I agree. I don't know that that's ever had a huge impact on the day-to-day, or doesn't change the direction of grain markets over the longer term. It's just like kind of policies will whichever party is trying to get in, try to put up, ahead of the election.
Yeah, not the markets, but we'd been anticipating some kind of payment to come out from Trump before the election, and
Here
the
we go.
tweet just says it.
Well, and hold on a second.
Just wanted to ask a few questions about the sunflower market, the sunflower acreage, and how the crop looks this year.
Sunflowers, he wants to talk about those.
We've seen a little bit of an increase in sunflowers out in western North Dakota. The price last fall was
Good.
really high. That was because obviously the delay of harvest, and there was a lot of wet or quality issues with the sunflowers. Prices fell off a little bit, but quality, there hasn't been too many issues with the frost or dryness, not to my knowledge. I could be wrong, but that's kind of...
Production's been really stable the last couple of years. In fact, I think the last 2 years were record, or first and second years in terms of sunflower yields were record high, and the market absorbed it really well. I mean, sunflowers were the star pretty much a year ago. Good yields and good prices.
Sure you don't want to talk about them, Bret?
Not touching it.
I have a question on some of those specialty crop markets. What about the canola market? Has that been following the upward trend in the soybeans? Can anyone speak to that?
Yeah, it has. We are a lot ahead of last year's price. Canola has been running really well out in western North Dakota. Haven't heard of any quality issues, but as for acres, I'm not exactly sure where we're standing. But
Canada's canola crop their supplies are extremely tight, and their production is the last Stats Canada numbers, which are always a month behind, right? Talk about bureaucracies. I think they surveyed people in July 1st and put out a number end of August. Well, it's changed 18 times. But canola supplies, Canada tight, and their production not as big as people thought it would be. Kind of interesting. They're poo-pooing the canola crop, but telling us how good their wheat crop is, which they're growing next to each other. But
Well, and two, that's another factor that maybe we need to play into all this market talk is Canada. They've had their fair share of issues, and you think it was cold down here. Obviously, it was way colder in Canada during this frost. Are we going to see any of that factor into it? And I know that has a real big influence on U.S. canola prices.
that did not generate much concern even among the Canadians, the freeze and frost. They thought their crops were far enough along. I mean, Canada's supplies of everything are relatively tight because they have just sold the hell out of this market, because of the currency differences over the last year and transportation that they had. So their wheat supplies are down, even though they're going to have a nice wheat crop, but their canola supplies and barley supplies are tight.
We had supply demand report out last Friday, reset the bar.
You saw the stocks numbers, yeah.
Yeah. And obviously, as we go into October, November, January, as you look into those reports, is there a tendency on what USDA does with where we are with supply?
You mean like if they reduce the yield in September, does it continue to go down? I can't say for sure.
I'd have to go back and look at history to see what that is. I think, to me, the yields are going to be relatively accurate. Again, it's just going to be how many acres do we actually get harvested.
Farm Futures magazine came out yesterday with a planting intentions report for 21, which I find crazy, but they said soybean acres next year was going to increase by 4 million acres, corn just down a fraction. They said spring wheat was going to take a pretty big hit, and winter wheat was going to go up. You might give much credibility to numbers when we're here in
I
September?
think, winter wheat, I think, will go up a little bit because they're going to have really good planting conditions. I mean, it's wet down there. They're not too wet, but it's just right. So The guys I talked to in Kansas and Oklahoma think, yeah, that we could see maybe 1 million acres more winter wheat. That's not saying much when winter wheat acres were the smallest they've been in history the
Right.
last couple of years.
Right. And quite frankly, you know, we've had a 6 in front of the deferred Chicago wheat contracts a few times this last few months, and they can double crop a lot of those. Why wouldn't you plant some winter wheat and then grow soybeans behind it in the eastern corn belt in Ohio, Kentucky, Tennessee, southern Illinois, some of those spots, and then grow 40 or 50 bushel soybeans behind it when you can grow 70 to 80 to 100 bushel of winter wheat at $5.50 and then slap in.
But it's soft red winter, and I don't think their cash prices have been. I know Chicago's been high relative to
Yep.
Kansas City, Minneapolis, but cash prices, our exports of soft red are
Right, I understand that. I know what it's used for. I know, but I do track that basis, and 50 under is a normal price, which means $5.50 cash wheat. So, I mean, I would expect to see some soft red prices or acreage increase as well. So you take the hard red, the soft red, and then our normal spring wheats and some of the other spots. You know, if we see an increase in those acres because of price, and again, we're out of balance on a lot of those futures prices, which drives some decisions as well.
I think there's definitely room for tweaking on the soybean corn. You know, it's coffee talk now where farmers change their mind 1 million times going into next year, especially when there's a crop of soybeans and corn out there yet to take off.
Yeah, no doubt.
And we just keep forgetting that corn prices are not very good. I mean, even with 370 corn at 40 under, that's break even or less for most growers. So soybeans have just become profitable. We understand wheat is about a once every 3 or 4 years that we can make money on crop. Soybeans is the one bright spot right now, which means that if these prices continue, we're going to see probably a more significant increase in soybean acres than we would otherwise, particularly here in the northern plains.
You talked about that reluctance to pull the trigger when we are in this market. That's rewarding us a little bit. How do you, I guess, adjust that attitude that we get growers to start looking at managing those decisions, I guess?
2x4? It's hard to do because, you know, marketing is very emotional for a lot of folks. And if they don't understand their cost of production well, if they don't understand cash flow well, it can be really gut-wrenching and hard for them to make decisions. And then we hear about it's dry in South America, and soybeans could keep going. They could go, what, $13? $15? $18? Right? So you all go home now, and you said you heard $18.
I'm out of here.
You heard $18 soybeans, and that's the stuff that prevents people from making profitable marketing decisions. If they go to 18, yeehaw, I might keep a couple of buckets full to sell at $18 per bushel. But if we can start hedging new crop or you know, our existing production or new crop production in profitable ranges, folks need to take advantage of that because nothing cures high prices like high prices. And if we stay out of balance with soybeans like we are now to corn, we're going to drive in a boatload of soybean acres. And that'll fix whatever price we get to later on in this marketing cycle.
We talk a lot about these market fundamentals, the weather and supply issues, but the technical side of this market, I think sometimes a little harder for us to absorb. Is that fair?
Yeah, I don't think there's any question over the last 15 or 20 years, the fundamental side of the market has taken a backseat to the technical side. I mean, we're trading, I can't remember anymore, but probably 10 times the volume in these futures markets that we did 20 years ago, and it's because they can do it electronically.
Yep.
And it still, I laugh every day when at the end of the day, someone says the funds bought 8,000 contracts of wheat and sold 20,000. How the hell do they know, right? I can sit in my basement and I can trade millions of contracts and no one has any clue. So they make half of this stuff up. But when you have the funds that trade technically and in very, very short, I mean, not days or weeks, sometimes in minutes, Yeah, they can distort a market. Over the long term, I think fundamentals kind of bring things back, but the long term's gotten longer, first of all, and the volatility has gotten greater. And basis the same way. Basis used to move very minimally. You used to say if you use futures to hedge that you took 80% of your risk out. Well, you don't anymore because basis levels can move in crazy 50 cents on beans, right? I mean, that's a lot.
Yeah, and we used to have, our historical data shows that prior to this last decade or decade and a half, 50 cent harvest basis on soybeans, 60 cents maybe, and we'd get down to 30 cents, in the 90s. But then we had a trading range of $4.50 to $6. Now all of a sudden we've got these, much higher futures prices, and basis is probably the same percentage, but it's a bigger number at times, $1.25 to 75 cents.
I'm just going to say a word about getting farmers to sell. There's other ways to own stuff, right? I mean, you don't have to own futures, but even options. And this year is one of those unusual years because basis levels are high, as we said, right now at harvest, and the markets are flat or in inverses. So you can buy deferred options, and you don't have to. If nearby corn is $3.50, you don't have to go buy a $4 corn call in the March because the markets are relatively flat. So there are ways, if you're concerned that it's never going to rain again in South America, you can buy some call options and put some cash in the bank and relax, right?
I've been reading markets for 38 years now, and when I started, when that price went up a half cent, we thought it was a big deal. Obviously, we've got a whole lot more volatility in our more recent memory. Is volatility our friend? Is that an opportunity in the marketplace?
I think it's our friend. I do. I think you just have to learn to make some sales when that market gives you the chance. Like I said, 6 weeks ago we thought we were all dead and gone, right, with $3 corn and $7.50 beans, and all of a sudden we have a great opportunity. We ought to be selling some stuff. You don't have to sell it all, but you ought to be doing some.
Incremental sales into increasing markets, you can't go wrong.
Absolutely. I mean, reward the rally. A lot of these guys, we hit 950 today cash at Harvey, and they've been waiting for 950. You call them, and we'll see how high it goes. Just reward the rally. I always say bridge selling. If this is your worst sale you're going to make, so be it.
Yeah. Well, I want to make sure we wrap up on time here, but I would love to leave on a positive note. So if you all could just take 1 minute to tell us what's good, what positive note can you leave people with today? Jenna, ladies first.
Yeah, I mean, absolutely. The beans have been rallying. That's definitely a positive. Just a thing to remember, we are coming up to harvest time for the Midwest, and there's good weather coming. So this next couple weeks, I think we will see a little bit more volatility. Again, reward that rally, and if it's something you can sell at, definitely make that sale.
Yeah, awesome.
But I think if I ranked crops in order, the ones that I think are the most positive or bullish, it's got to be beans, number one. I would put wheat too, but I'm kind of a loner on that, and I would put corn number three. Like we said, you've got a great chance to lock in good basis, even with high freight at harvest, good prices. I would certainly do some of that. If you want to own something, look at options, spend a little money and sleep at night.
I'll parrot what folks have been saying. We rarely see prices increasing this time of year.
Especially with record yields.
Yeah, well, with record crops in general. So, I mean, obviously, we started from some fairly low levels, and that's a part of this run. But just be happy that we have this opportunity now, and we're not talking about LDPs on, corn or some of these other nasty old-time terminology that we had to deal with here recently.
The only other thing I'd say was, the world has had record crops like 7 out of the last 8 years. I mean, it's just been phenomenal. There have been few significant weather problems. I mean, that trend, I don't think is going to
It's also a
last
testament to
forever
the
either.
genetics and those kind of things that we are,
Well, it's also due to all this extra carbon dioxide that's in the atmosphere, right? Don't plants use...
Greenhouse. We like crops like
exactly.
greenhouse effect.
Well, yeah, that's awesome. Again, Bret Oelke, Mike Krueger, Jenna Knutson, let's thank our panelists.
Again, a reminder, we've been live streaming all of our forums here during the Big Iron Farm Show. If you want to review things or any of the sessions that we've had over the run of the farm show, you can go back online, you can go to our website and find that link. The whole playlist is there, and you can see it at your leisure whenever you want. It's all on YouTube. So again, thanks to our group. Thank you for all of you for being here and joining us here at the Big Iron Farm Show. Have yourself a great harvest and a good 2021.
And come grab a hat.
Yeah.
Thank you, guys.
To keep up with today's increasing production demands, growers are quickly realizing traditional fertilizers are coming up short. Beyond a single form of sulfur, MicroEssentials with fusion technology delivers sulfate and elemental sulfur for season-long availability. Early in the growing season, sulfate sulfur provides young plants the nutrition needed for optimal growth. But plants dependent on sulfate sulfur alone are left vulnerable to the yield-robbing impact of leaching. But MicroEssentials is very different. Over time, microbes in the soil more efficiently convert the elemental sulfur into sulfate, continuously supplying the crop throughout the entire season and beyond. Only MicroEssentials with fusion technology delivers season-long sulfur for steady nutrition throughout the growing cycle, resulting in higher yields and higher profitability.
The most stressful part about being a farmer is the uncertainty of everything. Every day is a gamble. You might get a hailstorm, you might not. You might get the rain you need, you might not. You don't know what's going to happen. Currently, between my dad and I, we farm about 4,500 acres. Things are a little tighter than normal right now. I'm looking at the markets every half hour to an hour. That's what a lot of it comes down to nowadays. It's all down to dollars and cents. Trusting your product is the biggest key to it all. When I buy product, I want to know that it's going to perform. It's all about having my NP and K right there, right where I want it. My experience with MicroEssentials has been great because I know that when I'm applying my fertilizer that it's going exactly where I want it and every piece is the exact same. Farming is our livelihood and this is all I've ever done. I hope I can pass it on to the next generation of my children and maybe my grandchildren someday.